Hello and welcome to IBA and KPMG's webinar, where we'll be discussing the state of the industry. It's Phil Seymour here, Company President at IBA. Thank you for joining us today. Well, we're about to enter one of the busiest periods for the Northern Hemisphere. Our summer season usually delivers the highest revenues and profitability for the airline sector. But clearly, the incident over the last couple of days, we know how susceptible our industry is to some political and macroeconomic changes. The incident with Belarus and Ryanair is not a great start. We expect to hear more about that in the coming days, of course, regarding potential sanctions and restrictions around airspace. But anyway, I'm joined today by our Director of Valuations, Mike Yeomans, and by Kieran O'Brien, who's a partner at KPMG Ireland, Head of Aviation Advisory. A warm welcome to both of you. In terms of the topics we're going to be discussing today, we've got key industry events. We're going to touch on ESG, secondary market, lessor consolidation, the airline status, administrations and restructurings, ABS market update, and the aircraft values that's going on in our sector right now. As a quick reminder, in terms of IBA's data intelligence products and our support to the industry, we've been doing this through the aviation cycle for 33 years. From our InsightIQ data products, valuations, advisory and analytics through to our hands-on technical and asset management. If you're not familiar with our appraiser services, we've got 6 ISTAT appraisers, 5 of which are senior and above, and we now have 1 ASA senior appraiser. We've been voted Appraiser of the Year for 2021, third time in 4 years, so sincere thanks to all of you for voting for us. That's a trophy that's very close to our hearts because it is voted by you, our clients. Thank you very much for that. Over the last year, we've carried out over 3,500 valuations. That's across engines and aircraft types, and we've been appointed to most of the mainstream lessor and bank panels. Our ISTAT team, of course, is the powerhouse for our values module in our data intelligence platform, InsightIQ. I do want to mention InsightIQ again. It's our one-stop aviation intelligence platform. We do recognise the importance of both comprehensive and accurate data, and as such, we apply over 50+ quality assurance steps to ensure every entry is updated correctly. Our data stems from over 65 years of proprietary data, which we combine with third-party sources and our award-winning valuations to create leading aviation data platform, InsightIQ. We do continue to innovate and combine more data news, analysis and insight with technology to provide clarity and solutions to meet your company's ambitions. We've recently added more macroeconomic data and events, historical values, and now our new InsightIQ carbon emissions calculator, more details of which I'll share with you later in the session. Note that details of how to sign up for the system demo and more information, it's available through our website. We do have quite a lot of content to go through today. There may be a little lag between the slides as we've seen there, so just bear with us while we change over the slide deck. Now, rather than wait till the end to address questions, please do use the questions panel that's available to you. This will be a sort of an informal chatty style as I interact with Kieran and Mike throughout the session. We've got many questions that were sent to us ahead of the session, but as I mentioned, please do feel free to interact with us. We do have some Twitter interaction as well through hashtag IBA Aviation. You don't necessarily need to use that for the interaction, but there will be updates and information coming through that if you do wish. So we've got a couple of polling questions throughout this session to keep you all involved. So now over to the main deck and content. Over to you, Mike.
Thanks very much, Phil. Hi, everyone. I wanted to start off with a few slides just to sort of set the scene. So starting off here, what's the outlook for passenger flights? Well, globally, passenger traffic really remains pretty subdued. And what recovery we have seen out of the back end of the pandemic has really been on domestic routes. The markets which have fueled that recovery really have been in North America, in the US, where we've seen more rapid sort of rollout of vaccines, which has enabled markets to open there. Somewhat in Latin America, there perhaps some slowdown recently as more restrictions have been put in place due to rising cases, and also in Asia Pacific markets. We've seen China recovering strongly in terms of traffic and aircraft utilization, as well as more recently in the domestic markets in Australia and Japan. When we look at the load factors, we're no longer at industry historical lows. We are still in some regions. Middle East would be one, given the reliance on international traffic. Europe, we're also lagging behind with some of the restrictions that are ongoing there. But on an industry basis, we are coming off the bottom in terms of load factors driven by some of those domestic markets. So when you look on the right-hand side of the chart, on the slide, sorry, you can see domestic movements are still accounting for over 80% of flights and of movements, which they have been really since the beginning of the pandemic. We move to the next slide, please. We'll have a look a little bit more detail at the recovery that we're seeing by region and asset and also by role. So when we look by region, it's really mimicking what we saw on the previous slide. You can see Asia Pacific driven a lot by China, domestic China there. You can see the dip, which was caused somewhat artificially by travel restrictions around the Lunar New Year, but we've seen that growth continuing since. Also, you see in North America that continued recovery with the vaccine rollouts. We have seen a dip in Latin America more recently, but you can clearly see Europe lagging behind there. When you look at the different asset classes, you can see the regional jets on top performing strongly in terms of the utilization recovery. A lot of that is to do with the prevalence of the asset class in the US, so there's a link between the recovery of that region and of the asset type there. Unsurprisingly, you see the wide body at the bottom of the chart, given the impact on the international travel and the long-haul markets. We have seen the turboprop utilization sort of plateau and dip a little bit recently. I think we expect to see that recover, though. We're seeing some placements of those aircraft, and given how we expect the market recovery to play out, that should favor some of the regional aircraft types and the utilization there. And then when you look at the roles of the aircraft, so be that a freighter, passenger aircraft, clearly given that the belly capacity has gone away from the passenger market or has reduced significantly, we've seen continued increase in the utilization of aircraft with a primary role as a freighter. We've seen the passenger recover more slowly. But interestingly, on the corporate side, and in this chart, we're only focusing on aircraft which are derived from passenger aircraft models, but we've certainly seen an uptick above pre-pandemic levels there with the users of those aircraft accessing markets that are perhaps less accessible, less connectivity through some of the commercial routes. So really that's what we're seeing in terms of the utilization across those three metrics.
Mm-hmm. Mike, can I just add on that? I think that quick change category, the orange bar that we saw, I think some of that is down to those aircraft have actually possibly changed role. Instead of being passenger by day and I know postal and freight by night, I think they've actually moved into being, let's say, more permanent freighters rather than doing that multi-role. So I think that's the only one that I would say would be counterintuitive. And that is my personal explanation as to what has gone on with that one. But yeah, carry on, thanks.
Thanks very much, Phil. Yeah, I'd agree with you there. One, I didn't mention the combi where you have a split interior between the passenger and freighter. We've seen an uptick there. So anything really with the in and around the freight carrying capabilities is seeing heightened demand recently. So
okay.
So what's the latest update for European travel? We've obviously discussed some of the other world regions and recovery that we've seen there. And really the outlook is one of pent-up demand. We've seen on the left-hand side of the slide here, this is a recent chart from IATA, and it shows bookings, flight bookings from the UK to markets on the red, amber and green list. And those of you who don't know, if it's a green country, you can travel there and then back, and you do not have to quarantine when you return. Whereas the amber markets, you do have to quarantine at home when you return. The red, you have to quarantine in a hotel. So when we saw the release of the green list, we saw a significant spike in the number of bookings to those markets. You can see Gibraltar, Iceland, Portugal. But some of the historically more leisure markets, summer leisure markets, France, Greece, Germany, Spain, those did not see that uptick in demand. So really the restrictions that are in place are holding back some of that ability for recovery, particularly in Europe, we see. But with the rollout of the EU digital COVID certificate, which will allow the free movement within Europe for those that are vaccinated or had a test or have recovered from COVID, we should see that uptick in demand and bookings that we've seen from the UK. So that has been agreed sort of politically. We're expecting to see that go into regulations in July. Obviously, that's knocking right on the door of the peak summer season. So any hiccups or delays to that would have an impact on the recovery, but there's certainly some positivity there. The EU is also planning to open to vaccinated travellers from externally to international travellers if they've had 2 doses of approved vaccines as well. So if all of this gets put into place, we do expect to see an uptick in that European traffic and travel picture through the summer.
Okay. Kieran, have you got a view there, maybe from, I know it's Ireland perspective, or also the type of travellers, because these are all sunshine hunters, aren't they, going to the beach?
Yeah, and actually we did have a question come through on would we see leisure or business travel come back first? I think the reality is that, you know, clearly there's a pent-up demand for leisure travel, and I think, you know, we'll see that in the numbers. I think people will be certainly initially be a little bit more conscientious on the business side, because there's multiple parties. It isn't you going on your own on a holiday, if that makes sense. There's other things that have to be part of that. And I think companies will just be more conscientious in general. I think we've even talked internally, I know you have, about, you know, how many people would you send to something versus what you might have done in the past. Long term though, look, I'd be really surprised if we don't have a business travel return. I think we see it in terms of, you know, views people can, oh, I'll do everything over Zoom. But the reality is that, you know, over time, face-to-face meetings, etc., will still have an importance. So I think it'll come back. Whether it'll come back to the same extent, it's hard to know. Population will probably do it in a pure numbers context. But yeah, look, whereas clearly we can see from this, there's a fairly significant pent-up demand for leisure travel.
Yeah, and I think we've, you know, although we've become accustomed to this, it's one thing maintaining business levels and kind of patting ourselves on the back for not, you know, having massive revenue cuts like some industries, but actually winning new business. It's still, you know, so many businesses are still relationship driven. I know some people look at our sector and think that we're in an old-fashioned world of doing things, but actually, you know, when you're dealing with assets that are worth hundreds of millions of dollars, you know, that face-to-face meeting does become so much more important, perhaps. Anyway. Okay. Thanks, Mike. Yeah, the next slide. Okay, sorry. Back to you, Mike. Sorry.
No problem. So this is looking really at the OEM picture and the deliveries and what can we expect for, well, this year and the next few years. I think we'll continue to see lower figures, lower delivery numbers really out to 2025, which is more or less in line with where we see the overall market recovery in terms of traffic demand returning to pre-pandemic levels. And given the impact on the longer haul travel and given the size of the order books, it's not surprising that we see the deliveries dominated by the narrow body class of aircraft, specifically the Airbus A320neo family, which is accounting for almost half of the deliveries. We are seeing, well, that's year to date, by the way, The 737 MAX, we are seeing the aircraft, it's back in service now, it's delivering to customers, but accounting for a smaller proportion, of the overall delivery picture, about 22% of the deliveries there. Another thing you'd note, we saw a jump in 787 deliveries in April and late March. There was some interruption there based on some production issues. So we weren't seeing deliveries really much in the final quarter of last year. So there was some catch up going on there. And lower numbers of the wide bodies, though, really A350 somewhat lower. I would just note on the right hand chart where we split out some of the OEMs, but we have the red bar, which is other. That one includes deliveries from Comac, Mitsubishi, and also Irkut. So I just wanted to mention that in some of the colours on the chart there. Overall, in terms of delivery recovery, you're looking at 2025 before we get back to where we were in 2019. Okay,
well, we'll be coming back to you in 2025, Mike, to see if that actually happens. Yeah, a lot may happen, a lot of water to pass under that bridge. At this point, I believe we've got a polling question. Is that ready to go? Just waiting for that to load. Okay, so in terms of transaction levels, when do you expect them to return to the 2019 levels? Will that happen this year in 2021? Will it be 2022 or 2023 or later? So this is really across the whole board of sales of new aircraft, sale leasebacks, used aircraft transactions. When do you expect that to get back to 2019 levels? So a bit of thinking time for you there, and we will see how those results come in. I think that's reloading. Okay, well, this is a great segue, because I think, well, nobody thinks we're going to get to the levels this year. A third-ish of you next year, and then it's going to be 2023 or later. And of course, that's quite a catch-all. That's not necessarily you saying it's 2023 either. So let's have a look at the secondary market activity as it stands now. Mike, if you want to do a quick run through that, and then I just wanted Kieran's views on this thing about levels of activities.
Yeah, sure. I mean, we saw clearly a big drop in activity last year, except, I suppose, apart from sale and leasebacks, we would continue to see sale leaseback activity. A lot of airlines trying to raise capital through those. Much lower ABS in 2020. Really nothing after COVID. So yeah, over to you, Kieran. I mean, what are you seeing in the pipeline of transactions there? What do you expect for this year?
It's probably a little bit irregular, right? But the AerCap GCAS transaction alone will take it above 2,000 for the year, right? On the assumption it closes in this year, which is their target. But I think we've also seen a number of other transactions, right? So, Fly, Carlisle. There will also undoubtedly be restructurings in the market over the next while, right? Which will ultimately transactions. So, it might not quite get to the level of 2019, but it'll all probably certainly be on par, if not higher, with 2020, which I think is pretty significant in the current climate. And I think that might make it hard for 2022 to reach those levels, because a lot of those transactions will be sucked up. But I think the reality is, I think 2021 will see quite a large number of contractions, although clearly buoyed by the AerCap GCAS deal.
Yeah. And that is the point, isn't it? That it wasn't a trick question that we asked everybody there, but of course you have come in with that kind of trump card, which is this secondary market activity includes sold with lease. So technically, the novations and the fact that the GCAS AerCap deal is many hundreds, thousands of transactions. We will definitely see that. Well, definitely depends how that timing goes. But yes, if all of those fall into 2021, that part of this bar chart would increase dramatically. Does that mean then, if let's follow that idea then, Kieran, let's imagine they all happen in 2021. Will we then see 1,000 ABS deals next year as all those get sold into ABSs?
Yeah, and I think, look, there's no question, like, and we have a couple of ABS slides in a second, but while we're on the topic, right? So, like, I think if you'd asked people 6 months ago, when would the ABS market come back, it was years, right? And we look at the last financial crisis, it clearly took a number of years to come back. But actually, it's been pretty good, right? We had a high quality Sky one announced, a high quality White Oak one announced, and others, frankly, right? And others with plans. So there's no question that the ABS market has come back much quicker than anticipated, albeit not necessarily to the same levels, but a lot higher than and actually, demand has been good around those products and that offering, and I think people see it as a pretty good and robust product at this point. And certainly, if you talk to our team that lead these transactions, from our perspective, Gillian Kelly, Brendan Crowley, they will say that ultimately the structure is not that dissimilar than what it was before, albeit there's a clear focus on high quality assets, high quality credit, but we are trading in the worst time of aviation history, right? And we're still trading, which really points to the resilience of the product and the industry.
Yeah, I will come back to you on that, because as you say, we've got a bit more information on some of those ABSs and the state of the industry there. So yeah, let's have a look at the next slide, which I think is actually looking at the lessors. So yeah, Mike, I suppose this is just a statement of fact, isn't it, in terms of that, let's say those top 10. I suppose we class the top lessors as those who've got order books. I don't know how robust you see those order books. Are they just going to be moved to the right, do you think?
Well, I think we've seen a fair bit of deferral already. I think the lessors work with the OEMs there to defer all those deliveries. Obviously, we've seen the delivery rate has dropped recently. So I think if we see some of these mergers or perhaps acquisitions of some of these lessors, perhaps we might see some restructuring or maybe perhaps adjustment to some of those order books, depending on the volumes and the types involved. I think it'll be interesting to see how much of how many of those assets are retained in some of those transactions as well. Will all of the assets be deemed sort of core assets, and might we see some sell down of some portfolios or sub portfolios, perhaps older aircraft or on the niche types, if we start to see some of those mergers. So yeah, I think there will certainly be some element of shake up amongst those order books and some of those portfolio structures, but certainly with some deferrals pushing those deliveries to the right.
What do you think on that, Kieran? I mean, with those, you just look at this, you combine those top two, and if you're one of the other lessors in that top 10, even if you merge with one of the others, you're still way behind 1 and 2, aren't you, really? So
yeah, I think it's really interesting, right? And we've had lots of discussion. People used to talk about how many aircraft is too big and all this kind of things when it comes to platform and efficiency. But the reality is this transaction changes the paradigm, right? Like, it's going to be so much bigger. I think though what it does is it probably pushes the envelope of what people believe is achievable. And I think we probably will see more consolidation, notwithstanding the fact that clearly the market is going through a transition, right? And there'll be winners and losers as they emerge. But like, all of these guys are really well-run businesses with lots of experience. So there'll be lots and lots of opportunities for them to maximize their position. But yeah, I think we could see others looking to create larger lessors, because it does create a significant differentiator to clients now in terms of access to information, access to platform, access to aircraft and flexibility. So I think others here, they're all extremely well run with great management teams who will ultimately look, follow suit in a controlled and sensible manner. But I think we will see more consolidation in the next while.
Yeah, and I mean, most of these companies, I know there's some exceptions, but you look back over the last year and how they managed to raise funds relatively easily, unsecured money at, 1 or 2 percentage points. It's incredible, really, that thirst that there is to keep investing in this type of business.
Yeah, I would say we're getting contacted by more potential investors, be it be it private equity, be it pension funds, be it family office, be it whatever, in the last 6 to 9 months than we ever have before in the previous couple of years. There is a huge appetite for this asset class, and I think lots of these don't necessarily have aviation experience, or the ability to partner with an existing management team, an existing platform is hugely attractive. And I think we will see fairly innovative product solutions around that. I think the reality is, if you think back to pre-pandemic, there was a ton of money still coming into the sector at a value point. The only thing we can say for certain now is that value point is a lot lower, so there must be some value in it. So if there were people willing to invest then, they're surely willing to invest now, and that's what we're seeing play out in terms of people looking to access the market.
Yeah. Maybe we shouldn't be surprised, because that's why we're all still in this business. But
it's a great sector.
Yeah. Let's have a look at the next slide then, because we're going to, having said, well, I can say everything looks, great in terms of an investment side. I mean, the airlines, ultimately, the businesses that fly everybody around, the end user in this whole game of leasing. This is just our update of those airlines that have failed or are in the process of restructuring. And just to look through the red line is the where we're at in terms of numbers of aircraft that are caught up. I'm going to do a deeper dive into that shortly. The green is just a reminder. The green line is just a reminder that it tended to be oil price that drove airline failures in the past. There's a strong correlation between the previous year's Brent oil price and the numbers of failures. As Brent oil price went up, there were more airline failures. Clearly, what we've seen over the last year is that there has been a disconnect, but we mustn't forget that, because we're going to be talking about airline startups in a couple of slides' time, and we just need to bear that in mind, that it's kind of the only way is up. So let's have a look at the next slide, because there's still some more detail here, and the sort of important detail here is obviously the red signifies the airlines that have failed and the numbers of aircraft that have been impacted. If we look at the blue, there is still a significant number of aircraft that are at risk, that will either be leases or other forms of financing, terminated, perhaps some negotiated, some basically fait accompli in terms of what action may be taken against those aircraft. So I still believe we have a long way to go, and in terms of what will happen with these aircraft. And as you've seen in that sort of lower right hand corner, although we're almost halfway through the year, still problems from last year not yet sorted out, but still quite high numbers of aircraft that are going to be possibly coming back to lessors or back to financiers. So we're definitely not out of the woods yet. The next graph, though, the next slide, because despite all of that, this is sort of a segue into startup airlines. While I'm on a roll, Mike, I might as well continue on this one and then ask you to
Go for it.
I know from personal experience, having been involved with an airline that failed in the first Gulf War in 1991, that within 18 months I was gainfully employed by a startup airline, and it was really an exciting time because the original business plan was focused on 737-400s because that was kind of the largest aircraft that startup could afford at the time. And then, because lease rates had dropped, we could jump into a 757. So instantly, we were looking at carrying something like 30% more passengers, or having the ability to carry 30% more passengers than the original business plan. These aren't new airlines that have been formed just within COVID. Some of these were the blueprint was, and the spreadsheets were probably out there before the downturn. But now, if you look at some of the cost base reducing significantly, and of course with some of the cutbacks that some of the larger airlines, even some of the large low-cost airlines, have had to look at their routes, then that is leaving some opportunity around for some of the niche players. But Mike, there's some, there are some huge numbers of aircraft here, aren't there, that we're dealing with, and there's still wide body carriers looking at this. We've been talking about the long haul market, but predominantly, what is it? Narrow bodies, turboprops, and regional jets sort of leading the way as a combined group.
Yeah, we're looking, it's still a little unclear on a lot of the carriers exactly how many aircraft are going to be involved in those startups. So we've looked at it more from the point of view of account of airline with that aircraft type or class combination. In terms of the number of carriers, there's more than 130, but yeah, very much a focus around, in a broader sense, the short to haul and the regional sort of market segments. So you can see a lot of narrow body aircraft considered, a lot of turboprops, particularly in Europe and CIS, which is where we're seeing almost 40% of those startup carriers looking to commence operations either this year, or next year. But as you say, Phil, there's still a lot of activity around the low cost long haul business model. So I think some of the startups, like you've seen the North Atlantic, stepping in where Norwegian have exited the sort of low cost long haul business. You're seeing a lot of the asset types, some of those aircraft where the acquisition cost or the leasing cost is lower. So you see a lot of A330s in there, the likes of Hans Airways, which is looking to start up from the UK over to India. So yes, somewhat perhaps surprising, given the impact on the long haul markets, how much activity there is around that low cost long haul as a startup sort of business case.
So, Kieran, if you were advising a startup airline, it's the best time to start, isn't it? The only way is up, or what would be the words of caution there?
Well, certainly, look, I mean, if you don't have any legacy debt or issues, then clearly it's a clean slate. It's a bit like the banking crisis, right? There's worse times to kind of starting an airline. But I think it's a point you made actually when we were talking about this during the week, that ultimately that will change. The price of operations will go up as this recovers and people have access to opportunities and different things. So you need to be really careful about your business plan and your modelling and making sure you have effective liquidity in place. But look, it's certainly not a bad time to start up as long as you have the right formula to do it.
Yeah, I mean, I can't think of interest rates are the lowest ever. We've got pilots, maintenance engineers, MRO services must be at the lowest cost ever. We haven't even spoken about the asset values yet. Mike's going to be talking about lease rates and values as well. So, I was going to say the only way is up, but that's really the cost base. Yeah, I think these, but these startup airlines seem to be getting funding in place. So again, whether it's leasing or whether it's starting airlines, if you've got a robust business plan, there seems to be some opportunities out there. Okay, let's get into some of the detail on the ABS side with the next slide.
Look,
Kieran, do you want to kick us off with this?
Yeah, and I won't spend ages on it. Like, the focus of this slide is clearly to show two things ultimately, right? One, the clear cliff there in 19 to 20 and 21, but also back to earlier on, right? You look at 10 and 11 and 12, right? Like, there was a clearly, you know, a significant reduction. I think our view actually is that we are definitely seeing more people looking to launch deals, lots of effort, and the first couple have gone well. And actually we think there'll be a reasonable throughput this year. We can definitely see a throughput over the next couple of years, to the point you alluded to earlier on. So this will be a strong vehicle. We might just flick on to the next slide, if that's okay. And ultimately, these are a couple of key points that we're seeing, right? That, look, there are some positive features. There's no question that there is slight difference to structures, right? There's probably lower leverage, there's some enhanced protections and stuff like that, but fundamentally they'd probably be described as minor changes, and we are seeing broadly similar structures, you know, and obviously some specific things. To date, the ABSs that have been pushed through in 21 have been, you know, high quality, good assets and good airline credits, or good contracts in place with operators, depending on what type of ABS it was. But we're beginning to see it, and look, strong demand for A and B. You know, haven't really seen the C or the E yet, right? That may come at a later date, or it may not, but definitely we're seeing strong A and B demand. So we kind of continue to see this. We expect to see this throughput for the next couple of months.
Yeah, I think if I just pick up a couple of points there, we've actually had a question about is the ABS market a buy and hold market? Is there much secondary market trading? I suppose it was inevitable we'd get that question, because I think we've kind of been talking up the ABS market here, but of course those who invested, you know, a few years ago in some of those less than A notes, you know, they are going to be scratching their heads, aren't they?
Yeah, and we definitely saw, you know, over the previous 9 to 6 months, some trading in notes, right, at some level of a discount, albeit not a fire sale by any stretch of the imagination, right? At the end of the day, you know, back to everything we've talked about so far, you know, this industry is backed by real mobile assets, and I think people are still seeing that. So look, there definitely has been some trading. It's hard to say how it'll move from here, because there'll be lots of new, from what we're seeing, lots of new ABSs to invest in. But certainly over the last while, we did have some trading and wide out discounts, not crazy.
Yeah, I mean, a few years ago, I was personally a bit staggered when I saw an ABS that was purely one aircraft type and one sector. You know, the 737-400 freighters. I was kind of thinking, well, I thought this was meant to spread risk, etc. Now, of course, I've been proven wrong, because actually the freighter market is the place to be. So I just wonder whether we're going to see in coming years, you know, that freighter market being a target for some of the ABSs, and I think what that will mean is that lessors have had a reasonable blend of freighters in the past, but I think we're going to see, you know, the movement into that sector. If we look at the demand for freighter conversion slots for the narrow bodies, they're oversubscribed. We're starting to see, you know, new ventures on the wide body conversions. So you know, the question we're being asked is that just a sort of a flash in the pan reaction to what we're seeing? But I think we seem to be agreeing. I say we, the broader analysts are saying, well, that long haul market will take longer to recover. So it is inevitable that, you know, that need for freighters on long haul is still going to be, you know, in demand, and won't just disappear overnight as aircraft start flying again. Shall we move on to Mike? We spoke briefly about values and lease rates. Have you? Can you give us a quick run through this one, please?
Yeah, certainly. Thanks, Phil. So we just wanted to give an indication of, well, firstly, on some of the key types or a sample of key types that we're looking at, both new and 10-year-old aircraft, what is our sort of current market value position, our current base value, and looking at the relationship between those two. And then in terms of the market values, what can you expect in terms of an adjustment from IBA's value opinion in our mid-year update? So in terms of base values, we're not making any plans really to change base values on the vast majority of types. We did make some updates in the first half on some of the primarily wide body types that weren't performing so well. If you look at the new aircraft, in terms of values increasing, it's going to be very few and far between. I think the A321neo is probably a stronger performer, as you'll see in the market at the moment, particularly on some of those sale leaseback transactions with some of the top tier credits. We're seeing strong value performance. We've seen the lease rate factors coming down in some of those transactions, almost to where we would have seen in 2019 levels in some cases. So certainly strong demand for that aircraft type. I think when we're looking at the Airbus A350, we'll probably see values staying, especially for the new aircraft, pretty much a similar market to base value relationship as we have at the moment. Similarly for the MAX, we are starting to see some deals there, sale leaseback deals, although in the secondary market we know there are some aircraft available and you may need to see some discounts in order to secure placements of those aircraft on lease. But certainly for the good credits on the sale leasebacks, we expect to see fairly firm pricing there. The 787-8, I think, slightly more mature age profile, fewer deliveries coming through, so we may see some softening there, particularly on the mature aircraft. But when you start to get into the 10-year-old and the midlife, I think there's still potential for softening across a lot of the asset types. The 777-300ER, while it's had quite a few extensions, and the 777X is delayed into probably 2024, 2025 now, that will keep aircraft in their fleets in many cases, but there is some supply in the market, and it's going to be challenging to redeploy those aircraft, I think, if you start to see more come out. A330, challenges of the aircraft are well publicized. We've seen some transaction data, and the pricing there is very soft. There are options in freight conversion, and the aircraft seems to be picking up there. I think over time that will replace the 767 as the feedstock starts to dry up there. So there is a future in that role, as well as passenger, but it will take time for the oversupply to clear. And then on the narrow bodies, the CO and the NG, I think we'd see a recovery. We're not making base value changes, but certainly in some of the transaction data that we're seeing coming through, there is some pressure on pricing. The 737-800 is certainly showing a premium over the 320, though. I think that popularity, as Phil was just speaking about in the freight conversion role, we're seeing a lot of owners putting aircraft through that process, and we're seeing the demand there. So I think that's supporting the 800 over the A320 in terms of the pricing, as well as the fact that the MAX has been out of service and hasn't delivered in as many numbers, so that hasn't pushed so many aircraft out into the market either. So a few factors at play there, but still some further softening in terms of market values through the rest of the year.
Okay, we've had a few questions on this, Mike, but I'll save those to the end because I think we need to continue through the rest of the deck here. Sure. So next slide, please. I mean, one of the interesting things we were talking earlier in this discussion, we called it a debate, but I don't think we're disagreeing on anything. So the discussion we had, Kieran, was, you know, investors still seem to want to get into aviation. So it's there seems to be a bit of a paradox, because in some parts of the world, I don't think there's any particular concern, but when we speak to some of the family offices and investment funds here, and when I say here, I'm talking Europe. This is kind of their first question, is about, you know, the CO2 and how they can still invest in something which will never be green. It's just going to be a different shade of brown. But I don't think the industry is going to be restricted, do you? Or you know, where do you see this heading?
Well, yeah, sorry, I'd be the same view. In the end of the day, I think the industry is doing its best to move forward, right? And clearly, at some point, hopefully, there'll be a technological advance, right? But I think what we're seeing with lots of our clients and talking to them, and look, we have a really strong sustainable futures team that works through this for clients. The first thing is to understand, well, you know, what am I reporting? And that's not about greenwashing. That's about actually understanding what are the metrics that are deemed important, and how do I think about, you know, being green, or what are the metrics I need to consider and do my best to support, right? And I think we see lots of people now struggling just to, okay, let's understand that. Let's see how we put it together. And then from that, probably looking to build strategies to do that. And look, you'll talk later on about SAFs, which I think have clearly a big impact to play. But isn't just that. We have other clients who worked out if they take out the magazines they're playing, they'll save $1 million in fuel, right, over a year. So they're clearly starting to turn analytics and data to being smarter. We clearly see, you know, looking for more efficient aircraft, all these different things. They are taking this seriously, but their first protocol is to understand, you know, what do I need to do? What's the metrics that determine good versus bad, and then what's the strategy I have to fix that?
Yeah, I mean, we're very excited about our CEC because in developing it, we were very keen to acknowledge that, you know, airlines have been reporting emissions and CO2 per mile or CO2 per kilometre as part of their disclosures for a few years, and obviously some airlines are way ahead of others. But we were very excited with our calculator because ours really matches some of the historic data that we've compared with airlines. So although we know that emissions are very complicated, fuel burn is very complicated, it will never be the same even on the same day on the same route because there are so many variables. But actually overall, the way we've looked at this and checked our data, we're very excited about our calculator. Have a look at the next slide, because we think here, you know, in terms of what can lessors do, because I think a few years ago the industry was, well, hang on a minute, this is all about the airlines taking responsibility. If the airlines are doing their bit, and if the passengers are doing their bit, then what has it actually got to do with lessors? But clearly what we're seeing is that there could be some benefit from lower funding cost. I'd mentioned about, you know, the good investor relations story. It is a balance, Kieran. I mean, you mentioned greenwashing. It's quite frustrating, I find, sometimes whenever the aviation industry offers a rationale, the easy response to that is, oh, you're just greenwashing. No, what we're doing is facing up to the facts of the industry and how long it takes to put, you know, solid investment into really important things. This is all about safety. This industry is about safety. So investing in hydrogen, it's going to take years to develop to get that on a scale that is going to enable us to fly with hydrogen fuels. So this isn't greenwashing. This is the industry. I do think the industry does need to do a better job of waving its own flag, because historically the industry has been very good at facing up to things. A lot of the areas I was involved with in the 80s was about noise. It was about noise suppression, and then it went on to sort of the broader emissions. So here, sorry, I'm going off on a tangent that's very close to my heart. You know, it's easy to say, well, lessors need to buy new aeroplanes, and of course some lessors will do that, and in their value proposition they'll be saying, look, we're replacing aircraft, our average age is reducing, so we're doing our bit. But there is a lot of talk now about the offsetting side of things, in terms of whether there are ways and means to buy credits that offset that. So I think there's still a long way to go, and ultimately those credits will cost money that will be a drag on the lease returns. But I think we're going to see increasing amounts of statements in whether they're audited accounts or whether they are sustainability reports. And here, just a reminder, we're only touching on the E in ESG. I think, you know, the broader ESG concepts are also being embraced by airlines. IATA do have the handbook available to airlines in terms of the broader coverage of the social and governance aspects. But I think, well, Kieran, I suppose I'm just looking for you to agree that there's a lot of work to be done in terms of our lessor clients, what they need to be pushing themselves.
Sorry, I think there's a lot of work to be done by everybody, right? But what I think is hugely positive is we have seen a fairly significant shift in attitude, right? People are looking to understand what they can do, and there's limitations, right? They don't typically operate the aircraft, but that doesn't, they're no longer seeing that as the point. They're seeing that as just one angle. There's lots of other things they need to do and consider, and I think that's really positive. And look, this is something we as an industry need to address. It's something we need to do because it will ultimately, you know, be a significant component of the long-term success of the sector.
Yeah. Moving on, I was just going to mention a couple of other things. The very important thing about CO2 reduction at the moment, the easy win, I think, would be that the aspect of sustainable aviation fuels, and the point here is that I think it's a simple solution. It is a solution. However, it's very important that, you know, that supply chain gets moving. This is just an extract of our model where you can actually put in the different types of sustainable aviation fuels, the different percentages that could be used across a fleet to show the net CO2 reductions. There is an important thing to clarify here. The life cycle emissions, they can vary according to the feedstock. There are some fuels are more sustainable than others in terms of, you know, what they do to the world in terms of producing that sustainable aviation fuel. But some of the comparisons, one of our most popular parts of this carbon emission calculator module is the SAF comparisons, because ultimately lessors can't control this, but actually they could start to ask those questions, even if they don't know what the answer is going to be. Asking those questions as part of that airline DD in the future, I think, is something we're going to start to see. Moving on to the next slide, these are just some absolute numbers for you. So just to get this right, the larger the blue bar, the better. Okay, so this is the amount of CO2 that that is reduced by burning 20,000 tons of sustainable aviation fuel. So if I pick on the one that's at the peak here, the third bar across, municipal solid waste, in terms of that derivative that can be produced into a sustainable aviation fuel, for every 20,000 tons of fuel that is burnt, it will save almost 60,000 tons of CO2 that's produced. And before you go away and think about how that works, it's because obviously the combustion process produces more CO2, but it's a question we often get, which is, hang on, you've created something out of nothing. Well, actually, the combustion process is the chemical reaction that produces all of that. So I think that's a fairly deep dive, and we've gone across quite a few areas of the sector. We want to come back to talk about something that's close to our heart. We have a polling question, and this is a repeat, really, of a question that we had back in November 2020, and it was, when will we all meet again in person in Dublin? I think there was some wishful thinking. It shows that we are, 29% of you were in the optimistic region. The majority said probably not until 2022, and some not until 2023. But we want to rerun this poll now to see what your current views are. So there are some industry gatherings scheduled for September this year. Be really interested to figure out if you're going to be there. To some extent, we probably should have excluded those of you in Dublin, because I assume that you will be going. But no, please do include yourselves in this meeting, in this poll. Then, of course, there'll be the January 2022. We do want to get back to those the kickoff of the year sessions in January, but will it be January 2022? Or do you think that really we're going to have to sit and, I was going to say, suffer with more of the same? So I need to move my screen a little bit. Okay, well, I'm slightly disappointed, especially if the 18% of you are already in Dublin. But I think there's a lot of optimism that come January, at least 2/3 of us will be meeting in Dublin. And for the 15% of you, I hope that next time we run this poll, we will actually all be in Dublin doing this poll, being hosted by KPMG perhaps. But let's move on then. I think in terms of the takeaways from this session, we've just got that slide coming up, just bear with us. I won't repeat all of these, but we really do hope that these the utilisation and in particular load factors come back. We've had a couple of questions on that actually. Freighters, positive. I think in terms of some of the domestic travel within the larger countries, we're seeing those leading the recovery. Still some downside in terms of OEM deliveries. We do start to see a lot more focus in terms of the emission sector and more broadly the ESG sector. We say that we jointly, IBA and KPMG, we expect to see 2020 levels driven by lessor trading and M&A, and still a lot to do on the airline restructuring, but that has also led to a lot of opportunities. ABS is, and again, just to repeat, I'm gobsmacked because this time last year we were really thinking it was going to be off the table, but that flight to quality in terms of the aircraft types and lessee credit that Kieran's referred to is going to pave the way, I think. And still some issues around the aircraft values, predominantly with the older wide bodies, but we're still supportive of those narrow bodies in terms of their base values at least, and expect some recovery. I do want to bring up a few questions. Just bear with me while I shuffle a few papers. Kieran, could you just pick up this point? I know we've mentioned ESG and we've mentioned this sort of greenwashing thing, but in terms of your sector, is it right that the focus is on the lessors and their investors? Is that a key area for you?
So I think it is right, but I think the fundamental answer actually is that the focus needs to be on everybody in every part of the supply chain. I think the reality is that we're seeing, increased regulation in the UK. Europe will follow suit. The rest will follow suit. That is, never mind about leasing, is around financial services and other sectors, right? Like every sector and every part of the supply chain, every sector is going to have to do their bit. And I think that's the way it is, right? And ultimately, lessors are following suit and are starting to think like that, as are airlines and other parts of the supply chain. I think the reality is that's what we need to do to improve ESG throughout the sector and globally.
Yeah, I mean, we've only spoken really, I suppose, about the airline and leasing and finance sector, but beyond that, I mean, Mike, we've had a question about the part out market. But I think if we go back to 2019, the options for a lessor or even an airline holding a 15 to 18-year-old 737-800, there was quite a few options. You know, freighter conversion, possibly. I know the market wasn't, the program wasn't as developed a couple of years ago. Part out market, very strong. Continue to lease because of the MAX program delaying things, but now there's not a great deal of choices there because of all of those dried up. Is it really going to cause more problems?
Well, yeah, I think we're having so many aircraft out of the system and out of operation, storage, and with utilization levels being lower, there has been less demand on the used serviceable material to support the aircraft that are in service. We've been seeing operators trying to utilize the green time that they have on the aircraft, and I think that's driven some of those owners to put more aircraft through the freight conversion programs. Obviously, that has been stronger demand there, but that has been enabled by the lower cost of the feedstock, which I think was what was holding that back pre-pandemic. So I think it has changed some of the options. It's opened some opportunities that weren't perhaps there before. But I think as you start to see that green time being burnt down, you start to see those aircraft, particularly the COs and the NGs coming back into the market, that will see drive demand for spare engines, for example, and material to support that recovery and that growth. So perhaps a bit slower at the moment, but there's I think we'll see that pick up over the coming years as we start to see more of the recovery take hold.
Okay, Kieran, just give you the sort of final word on it really. If we rerun this in 6 months' time, if we're in sort of back end of October and we're looking back to this presentation, I mean, do you think we'll be saying, oh, we were too pessimistic, the summer was great for those airlines and the restructurings have gone well, or do you see us still be thinking, well, actually, there's still a lot of unknowns? What's your general feeling on where we might be? I know you're obviously an eternal optimist, but yeah.
It'll all be rosy. I think the reality is I don't think 6 months will actually give us an answer. I think if we look at how long this has been going on and everything, right? I think we do have, even if the EU travel fees, everything, right, it kind of gets going. The reality is the summer will probably mask any issues that are probably there, if that makes sense, and the pent up demand will mask, etc. So I think it'll take us a while to work through. My own view, and look, I'm not an economist, I'll leave that to you. But ultimately, I think that we probably will have some level of a bit of a negative bounce when subventions end. Flying may not be as great as we all thought it was, numbers in the initial period, right? And that might create a reaction. But long term, I think we will see a return to normal levels. It might take a while, but we'll get there. I think, to your point in relation to investment and money and interest rates, that the financial tools are there to sustain a period and for people to have good, cost of capital, etc. The sector has certainly responded in terms of being innovative in products and being flexible. So I think we should be optimistic, albeit I don't know we'll be certain in 6 months' time whether or not we were being or not being optimistic. But I'd certainly still be on the optimistic fence.
Fair enough. Well, that bodes well for us to continue with these sessions every 6 months, possibly until 2025, when we can look back in time. So with that, we have gone a few minutes over, but thanks everybody for sticking with us. So just to remind you that we're using data from our online data intelligence platform, InsightIQ. We're offering demonstrations, so do drop us a line. Can be via the feedback form, which will appear shortly, or register through our website if you'd like to have a look at our system and find out more details. So please get in touch if there's anything else we can help you with today. We have had a few questions which I haven't got round to, but we will be responding to you personally on some of those. So thank you all for attending today's session. You'll receive a follow-up email tomorrow with a link to view a recording of today's session and the slide deck. So on behalf of IBA KPMG, thanks for joining us today, and special thanks to our marketing team of Melissa, Chris, Dom and Abby, who've organised us to present the event. Goodbye to you.